Hi, everyone. Welcome to our market update. My name is Vinnie. This is David. I'm going to put our phone numbers on the bottom really quick. You can also go in the show notes for information. And I'm going to share basically mortgage rates. But what's going on with mortgages right now, David?
Well, I mean, we've had a pretty good week overall. Like when you look at everything, we ended the week. Let's take a look here. I mean, it's not like you got a dramatic reduction. It seems like we've been hanging out around this 6.25, but the 6.25 is not really truly representational of where market rates really are, depending on what lender you talk to. Some lenders are going to be 6.25, some are going to be 6.5. Your people who are set up with no overhead, like basically no brick and mortar, they're probably more down at 6%, 5.99. So overall, the rates have stayed pretty consistent for about the last 2 weeks, except for that mild spike that we had when the Bank of Japan came out and said they were going to increase their own interest rates, which was interesting. So that was kind of cool. But then at the same time, those of you who know, the Fed's meeting on December 10th, and if you remember some of the previous different of these updates that we do, the rates on mortgages typically dip to their lowest a couple days before the Fed meets. So we're in that prime time. Look for some market swings. They're supposed to meet December 10th. And then, Vinny, I don't know, you remember that tool I shared with you, the rate watch? I think you're now up at over a 90% probability that they're going to lower rates, which seems likely because your personal consumption expenditures has gone down, which is huge. And we had the lowest continuing jobless claims that we've had in years reported as well, which is huge. So overall, I think rates have trended downwards. If you look at that Mortgage News Daily, that right there, if you look at the VA, they say 5.9. Your realistic rate is more like 5.6, APR 5.7. And for your FHA, that's more like down at 5.5. So rates overall are not that bad right now. A lot of people are looking out there going, when's it going to get even better? I still think it's going to get better unless the tariffs go away. I'm going to repeat that again. If those Trump tariffs go away, mortgage rates will spike and things will get nasty. You want to keep those in play, even if you don't like them. But overall, I think we're now slowly trending downwards, which is going to set us up for that explosive March time where I think rates are going to be much lower. And for those of you who are going, I'm going to wait till then, probably not a good idea, because the lower the rates go, the more competition there comes. And the economic data is in your favor right now. As far as it sucks to say, Vinny, because no one wants to say we want the economy to do bad and we want things to be not as good as they should be. But that's actually helping your mortgage rates.
Yeah. So something to think about, right? We see this every year, right? I'm going to pull it up right now. We see basically inventory go down a little bit, right? So right now, you can see the clicker below. We're at 4,600 properties. Ooh. We talked about it a couple months back. We're thinking we're going to get to like 7,000 or something like that. Or David said we're going to get to 7,000.
I thought 7,000. I was wrong. Again, I was wrong.
We're ticking downwards, right? We were getting close to about 3 months of inventory, right? So if no other properties were on the market, at the rate they're selling, how fast they take for it to leave the market. Right now, right, we're at 4,600 active properties, and we're at close to 2,000 pending properties. So we're getting close. Technically, I know it's sold, but I use the pending. We're at about 2 months of inventory. Okay, so after the new year, as rates talk, as David's talking about, we're going to probably see, if rates keep trickling down, we're going to see basically pricing go up. So for the people that are waiting, I'm going to wait for rates to go down before I look to purchase. Just be aware of that, right? So right now is a great time to look at all the variety of different programs out there, especially if you're okay with like the condo market or even the townhome market, right? There's opportunity for credits. There's opportunity for grant programs. There's the ability right now, if you qualify, to probably buy a house with only like $1,000 out of your pocket. Because you can get the grant program and the credits.
You're spot on. I just did 2 of those in November. The buyer walked in with $1,000, and each one of them bought houses for $500K. One bought a condo, and then one bought way out there in Boulevard. but they
I mean,
want $1,000. Like that's a smoking deal to get in and not be a renter.
it's
Nothing
really
wrong with being a
on
renter.
that monthly payments. I mean, it's really on the monthly payments. So kind of just really food for thought right there. There's programs like NACA. There's programs like California Dream in January. So there are a lot of different programs out there just to really factor in. So I want to pull up right now for the detached market in San Diego. We did see a little bit of a drop, right? The peak every year we see that little drop, right? The one thing that's interesting for the detached market, we're already seeing the little bit of jump back up. The last couple of years, we usually see that in January. We see that jump.
True.
But we started to see in November a little bit of that jump right there, right? So if you're on boots to the ground, you're seeing the real estate market, you are seeing a pickup to the market. So remember, when you watch the news or watch a lot of these platforms, they're usually a couple months behind, right? So be aware that anyone thinking that the market's going to crash, we've talked about that in a lot of these episodes right now. It's highly unlikely that's going to happen.
Let's not go with 100%. Let's go with the Dumb and Dumber. So you're saying there's a chance. Yes, there's maybe a 2% chance the market could crash. Odds of that are very unlikely. You know what we didn't mention, Vinny, and I thought I'd throw this out there. So for everyone, I get a lot of phone calls. People are like, what about foreclosures? What about foreclosures? Foreclosures. Yeah, foreclosures are less than 3% of the market, and that is not very high. But you know what is foreclosing that is helping people lower interest rates right now with the Fed's considering? Do you know what it is, Vinny? Do you know all those people out there that have like Mercedes, Porsche, BMW, all these super nice cars, and they pull up and you're like, wow, my car's 10 years old. How do they afford that? Yeah. Well, they're all foreclosing on those loans. We have the highest default rate now on auto loans in years. I'm not laughing because it's funny, even though those people shouldn't have bought those cars in the first place. You know, drive what you can afford. Once again, Vinny may say something like, look at the payment. But those are really in high default now. Car loans that are considered subprime, they're basically borrowers who went in who are like, hey, normally I should drive a Kia, like a hamster car, but I'm driving a 7 Series Beamer. Well, those are foreclosures. All right, I'm going to show you guys something. So David brought up a point, right, about foreclosures, right? Okay. So this is something that we haven't really talked about in the past. So I'm gonna bring it up to you and go properties. Let's go property type. This is a platform. If you need any information, feel free to reach out to me. I can show this to you guys. Right? Is that the foreclosure? That is it. It's got the radar going. I saw it. Okay, property radar, right? Okay. So 789,000 properties. You can see right there, 789,000 properties, okay, in San Diego County. That are single family, detached, condos, twin homes, townhomes, other homes. Okay. Now, out of those 789,000, there's 50 bank owned. 50. Oh man, so you're telling me there's a deal? Free foreclosure. There's a deal? Free 50? Foreclosure. 543 free foreclosures. And these free foreclosures doesn't mean they're actually going to go to auction or go to sale. 231 actual auctions. Now, these are just people that are in default. They're possibly trying to keep the property because most people are trying to keep their property right there. Okay. Now, you factor in how many are free and clear, 174,000 that have no payments on their properties, right? So for the people that are saying, oh, the market's going to crash, all this kind of stuff, there's not a lot of fear in the market. There's not a lot of adjustables, right? So yes, just like David talked about, credit card debt, basic car debt, things like that. That could be something that could do it. But in the current housing market, the people that own are probably good for where they're living. And if they have to leave their place, they're gonna have to pay rent somewhere else. Can you, out of those 500 foreclosures, can you find me one at 50% off and call me today and represent me? And I don't want to pay you, but I want the seller to pay me the bank. You know, I talked about it before. Home path, right? I know HUD homes, right? HUD homes. So there are REOs. There's not really any in San Diego right now, but there are HUD homes, right? So you can look at that.
there are short sales. I had a client that basically bought a short sale last year, right? And there are other ones that are out there, right? The people that have to sell, a divorce, things like that. So there are particular situations like that, but not enough to put fear in the market.
And for those of you out there listening, Vinnie is not referring to short people who are selling their house. A short sale is a specific kind of sale.
Wow, that's offensive. All right, happy holidays. We hope to do this before the rest of the year.
We will. This is good times, my friend.